What the hell is going on in this marketplace? Who knows? But was it just a standard Trump playbook? I mean, yeah. It was pretty convincing, to say the least, that he was adamant that he wanted Greenland, but he has achieved that which he wants, Greenland. They're coming to a deal, and the stock market has, of course, enjoyed the success of that. The volatility index, we said when it's high, you buy. Did anyone do that? I hope you did. But we've now got what appears to be a risk-on rotation. Conventional wisdom would say that when you're concerned about something, or to summarize it, when the shit's going to hit the fan, what do? Well, you come out of any of your assets and you go to the commodities. This is textbook stuff, and you hear me telling you all the time about this. When they're scared, they run to commodities. Subprime mortgage crisis 2007, 2008. What did gold do? It was rallying and rallying and rallying, and peaked on March the 18th, 2008. And then, of course, it started to pull back. Why? Because they had effectively hedged themselves. They've covered their risk, and everything was then going to look like it was going to come back to normal. So gold comes back down, and then the stock market goes yippee-ki-yay to the upside. Are we in that right now? Now, I've been getting a lot of stick because I put a post on Instagram saying, don't buy gold. And I used the logic of the fact that commercial traders are effectively positioning themselves for what looks like a nice little corrective move on gold. But let's just understand something. If risk is back on, why would you go into gold? There's only one other reason for it. And that is the idea that interest rates are going to get cut. Trump's saying that if Powell doesn't cut the rates, then he's not going to have a happy life. This guy is now putting out threats. 47 can do whatever he wants. That's what it looks like. But the problem that we've got is if this Supreme Court ruling on the tariffs does come into play, maybe that's something that is happening, and that's why Trump is backing down on the tariffs. Maybe with the fact that Trump has not actually succeeded at getting rid of Lisa Cook. And if he does do that, then it undermines the Fed. We're going to have bigger problems. But there's one little issue that we do need to address this evening, just before you decide to sell your lungs or get rid of your nans and distribute them, do whatever you need to do, like just to raise some capital to plow into the stock market because Trump says it's going to double. So in other words, NASDAQ to 50K, Dow Jones to 100K, and the S&P to nearly like 12, 13, 14,000. I mean, that is very, very possible. And it will happen. When we look back at our kids and, when they're like 30, 40, they'll be like, what, the S&P was 6,000. And you'll be like, yeah, I remember those days. And the S&P sat at like 21K. Why? Why do you think it will go that much? Well, it will always go up. Because the S&P is the top 500 US companies in principle. And they're always going to be doing business. You'll always need cars. You'll always need AI. You'll always need medical. You will always need defense. Everything in the stock market is a need. That's why the stock market has a 100% success rate at recovering from crashes. So when everyone's like, oh, why are you so fuddish and bearish? You don't understand the fucking game because you buy it when it drops. I'm giving you a clue in the thumbnail without telling you. Did you like that, though, with the thumbnail? Because I'm going to break down why the yen is the only thing we need to really just pay attention to. Because it could rock the market. I'm just saying, when you're buying right now, you've got to be like, okay, I've got to keep this and take this into consideration just in case. Don't go all in, all right? Don't plow into the market just because Trump thinks it's going to double, all right? Before it doubles, he would have been and gone, and we'd probably end up having Biden 2.0 back in. But anyways, let's have a look at what's been going on today. We've had some news regarding Intel. They're doing really great with their potential earnings coming in, looking like it's going to smack it. I mean, it's just amazing, isn't it? Yes, I do have a funny thumbnail. Let's break it down, guys. Here we go. So, the QQQ clearing out that gap yet again, and they managed to hold out Now, the proof of this move is going to be interesting because the call wall at 620, which historically has been a very interesting spot for options traders, is going to be put to the test on whether they do actually believe that everything is going to be okay. What's going on in the news is, of course, not that, but this. Stock surge on Trump's claim of deal on Greenland. So he's backed out the idea of Greenland, and he's also said we're going to pull back on the story of tariffs, but we still have tariffs. And of course, the Supreme Court ruling that just keeps on getting pushed aside. We're just waiting to hear if that's going to be something that's going to come into fruition, in the sense that are they going to deem the tariffs illegal, which means it's going to be not a carry trade unwind. What the hell is that? It will be a tariff trade unwind, where all of the money that the US has claimed is effectively going to have to be returned, for the better word. But let's see what the ruling does actually say, because they can rule that it's being deemed illegal, but then they can actually turn around and say that, well, given that it might disrupt everything, we're just going to have to work out a deal. And Trump is the dude for deals, so I'm sure they'll be able to work something out. But it seems like sentiment is somewhat positive across the board, guys, jokes aside. Just going over into the volatility index, you can see that bad boy has taken a nosedive. Well, we said it. When it's high, you buy. You got the clue from somewhere. I don't know. But yeah, you've got it. And I broke it down on my Instagram. I posted a video on there telling you about this, giving people effectively the clue. When it's high, you buy. But anyway, people were just cussing at me because I said that you shouldn't buy gold. Why not? Well, the logic says that gold right now, given that it has just dumped, but not a dump. That's not a dump on gold. Sorry, yeah, pull up the 1 minute time frame. That looks pretty aggressive to the downside. Yeah, but it's not a dump. This is not a drop on gold. Come on, this is just a little bit of a pullback. And yeah, it's nothing to be worried about at all. But fundamentally, when the stock market shoots up and then gold goes down, it is a clear indication of risk on, risk off. Because you had tariffs, you had the Greenland situation, and the thing that we're going to talk about right now is the Bank of Japan and their problem. These are all fueling investors' desire to go into commodities because they need to seek the safe havens. We've got the idea that when the interest rates get cut, gold's price inversely goes up against that. And you know me, I'm the boy for gold and silver. You know, we were talking about telling you all buying it at $1,900 an ounce, telling you it was going to go to $3,000. It went up there, and I said, please buy some silver at $19, and it just went and just killed every single price projection known to man. But I think I served you well with that projection. But more importantly, this one event could lead to a bit of a problem. So just hear me out with this. We've got this story or problem with the Japanese bond market, and I've done a short video on this, but I'm going to break it down for you here. You're going to be hearing about Japan's issues, okay, regarding their debt. In front of you is this chart right here, which is effectively the government debt to GDP versus interest rate growth differential. Now, the best way for me to explain this is this. The Bank of Japan, or Japan overall, have been going in what is called the Japanese miracle, which means that they keep on distributing and creating debt and debt and debt, and it actually helps them as a nation to sustain themselves. And they don't ever have to worry about defaults or anything like that. They are literally surviving on debt, and it's actually making their economies flourish. But we've now got a bit of a problem. The problem is down here, we've got this negative contraction in terms of the 10-year yield government bond yield minus the nominal GDP growth. To better explain it, it says here that when ratio is less than, or well, relative to the GDP, if it's less than the actual black line, so when this is down and this is above it, okay, it says here that interest costs exceed growth, making debt service increasingly onerous and potentially leading to a debt spiral. Now you look at that and you think, does that mean that the Bank of Japan's got a problem with debt? Well, given that they are government debt to GDP is 222%, that means for every yen that they earn, they owe 222% on top, and they can sustain it to 250, and the system will be fine. The real problem for the Japanese is the yen, their currency. This is why investors are starting to get concerned. If I said to you this, go and buy some stock in Nvidia, you'll look at the price of it and you'll be like, wow, okay, $180, $102, $100, whatever the price of Nvidia is, all right? You say dollars, right? So you then be like, my stock is worth $185. Cool. You go over and have a look at your dollar, and then you're like, well, it's priced at $180, but my dollar value is shocking. So what's the point in holding dollars? I mean, I'm forced to hold on to a stock until I can sell dollars and get the money when the dollar has appreciated. This is the problem that Japan have. It's not their debt problem. It's the value of their currency. Going into the yen itself, it's starting to become a big, big problem for them. And on top of that, you got Takeshi getting ready, Takeshi, whatever her name is, she's getting ready to cut taxes on food. That's not a problem for them. It's not whether they're going to generate revenue from taxes and that's going to cause them a problem by cutting it by 8%. No. They increased their interest rates not so long ago and generated $160 billion or billion yen in income interest. So that's great news for all households. The problem is the value of their yen. So if investors who are turning to the Japanese bond market and they're like, this is deemed as the safest asset in history next to the US. Well, if my yen is depleting, what's the point in holding on to the bond? So they're all getting concerned about what's going to happen next, which leads to one thing. And the only playbook that the Japanese have is intervention. What happened this week? The finance minister of Japan got the agreement with the United States for Forex intervention. Now, they're going to purchase USD, but behind the purchase of USD, what it really is they're going to be getting rid of US treasuries, right? They are the largest holder of US debt. They're going to be getting rid of US treasuries if dollar yen shoots up to 160. And we are already in that environment. We are not too far away from the 160 mark. Historically, Japan intervenes, and that's shown by these blue lines right here. It's the only playbook. Why would we need to be told that they have been given an okay agreement from US for Forex intervention to save their bond, to save their yields? Look at the Japanese yields right now. Why is this relevant? Why do I need to tell you this? Why should that matter to you if you are involved in Bitcoin? Because it's going to dictate whether or not the carry traders are going to get triggered off the back of this. If the yen starts to move up aggressively and it then fuels this carry trade, then investors are going to start pulling their liquidity out of the US market. Their dollars are going to be depreciating, and we're going back into the same problem what Japanese bondholders have. Their currency is getting smacked. So they're going to have to do something and get into what? Safe havens, which would be the yen, which would be the euro, which would be the pound, which would in principle be gold. Okay? Because investors will be going to commodities then. You would then get a repeat of the volatility index shooting back up. Where is it? The volatility index would shoot up again. This is the only thing that can rock the market, in my opinion. If they don't do something about their bond market in the sense of doing something about the currency of the yen, because ladies and gentlemen, if we're going to really look at it, okay, and we zoom out, because they always say zoom out, okay, let's zoom out on the weekly time frame. I mean, let's go on the 12-month time frame. I mean, where are we? We are practically close to polarity. Beyond it. How wild is that? Look at that. That's their currency. That does not make sense to hold on to Japanese debt now, does it? Which explains why the Japanese yields have been shooting up so aggressively, because investors are waiting to see what they're going to do about their yen. Why should I buy your bond when your currency is dog shit? It doesn't make sense, does it? What's the point? then you're going to create this inflation where everyone's going to have to keep on buying lots and lots and lots of yen. They're going to have to keep on printing and printing and printing. That's when they really wreck themselves. So get ready for the Japanese Forex intervention. They got the okay from the United States. So what does this mean for you in Bitcoin? You would naturally assume that Bitcoin would have been, in essence, the hedge against inflation. Bitcoin hasn't yet proclaimed the title of safety. I'm sorry. If they've been saying Bitcoin is digital gold, but yet Bitcoin ain't behaving like gold. If it's the digital gold, then why is it not behaving like the gold? Because it's got a risk-off factor, and the only problem is it's because it's so volatile. That's why. How can something that has a supply be so... Why is it not there yet? That's the question. Why is it not at 300,000? Why is it not at 400,000? Because the game's being designed to screw you over. Because you futures traders are the reason for it. There's $18 billion worth of long liquidations at 77,000. I mean, you've just practically been given the stock market a heads up that everything's going to be all good, okay? And that, in that sense, that Greenland situation is all good. Tariffs is going to probably not disappear, but we've now got a risk-on environment. How long is that going to be until the next problem? If Trump decides that he wants to go and take over, I don't know, give me Hawaii, then he's going to be like, I want this plot of land. I just want it, I can't attack a place without owning it and what have you, or defend it. But, all that's shit. But do you see what I'm saying? What's the next event? The macro event that is next is this story with Japan, okay? And I'm saying this now. What if Bitcoin is the true leading indicator? If Bitcoin is the leading indicator about the relationship of risk, then logic says that gold has gone up because investors were scared about what was going on. Stick with me. If investors go to commodities because they're concerned about where we are economically speaking, then that explains why gold's price has been going up. Gold's price started to go up just before the AI story came into play, okay? Then we had the idea of interest rates coming into action where they were going to an easing cycle. Naturally, gold always works inversely to the easing cycle. So in other words, it goes up when they cut rates, and then when they don't cut rates, gold goes down. And when they do hold rates high, gold is down because you're generating a yield on the dollar. Happy days. So we're all good with that class over. But if Bitcoin is giving us the truth behind risk, logic says that Bitcoin should have just shot up today. Optimism should be there, but it hasn't. It's only up 2%. You guys are used to 90% drawdowns in cryptocurrency, and your bull market started with Bitcoin trading positive 2% for the day. Can we back it? I believe that Bitcoin is the leading indicator. Given that it's such a small supply and the opportunity to buy it, right? And the excitement from investors should be fueled in Bitcoin. So today should have been a good day for crypto. I mean, it's all right. Very hard to project when this Davos story was coming into play. We did this setup today earlier on with the Platinum members after the live stream. And I expected Bitcoin to make a move up. But it was very difficult with the price action. Look, this was a chopville, all right? I mean, look at this behavior. Down and straight back up. Red vector candle recovery. You hear me talking about it all the flipping time. First green vector candle, whatever. These are things. This is textbook hybrid system V-shaped reversals. Awesome. We anticipated the move in the video as well. We were looking for Bitcoin to make a move up. I said we're going to see a move to the upside, and then we're going to try and roll back down again. The stop run up to then bring it back down. And it's just, and then it comes back up again. It's just the fuckery of the marketplace, ladies and gentlemen. It's, how do we try and exploit these opportunities? And if you are trading in these environments, be careful. The lighter you trade, the easier it is for you. If you're able to open a long in Bitcoin, okay, and you have yourself a stop that is relatively supportive of the day's range or the average daily range of Bitcoin, then you are okay. Let me give you an example. Go into the settings of the hybrid system. Scroll all the way down to the ADR, okay? You trigger the ADR. And, of course, sometimes you might want to use this, which is the range daily high, range daily low. Where's that? Here we go. So you click the show RD, all right? And Keep it at that, okay? So already we can assume that Bitcoin's price has been suppressed. It's not really done too much, but you can see that they came towards the range daily high, which technically is a spot that they like to reverse from. Range daily low is a spot that they like to reverse from. You'll have these lines charted already on the chart from the start of the Asian session, and you can use those as stop runs, as stop losses. So if you're going to go long, you're using the range daily low as your exit, okay? If you're going to go short, you can use the area above the range daily high or a little bit, because sometimes it can go above it, and the same way with the range daily low, it can go below it. But historically, when you look at this and study these lines, you see that price reverses from it all the time. You've just got to make sure that the lines aren't compressed, because that looks very compressed to me. It's not wide, given that Bitcoin's volatility is wide. These lines should be wider. When they're close together, it tells you that there's not been that much volatility. So you're going to have rotation around the range daily high and the range daily low. All right. And that's just my experience from trading those many, many times. Okay. But I'm always going to have that conviction that Bitcoin will lead us, in the sense where investors, if they really are risk on, they will plow into Bitcoin. If they're not, then they won't. And the reason why gold's going up is because legacy market traders will always go over to gold when they're concerned about things. That's just what plays on my brain all the flipping time. What about the silver correction? What about silver? Is correction incoming as well? You know what? On my Instagram, some people have gone to town. They're like, what the hell? You know nothing. This guy doesn't know peanuts. He doesn't know shit and all that. I mean, these people must be defending their longs when they went long at 4,200. I mean, fucking hell. We've been long on gold since 1,200. We're all good. Silver at $19. We don't give a shit about a crash because we're still in profit. Let me explain something, ladies and gentlemen, all right? If gold is truly now risk off, the only thing that keeps gold up is the logic of interest rates, okay? If there is an expectation that rates are going to get cut, then we need to see the rate swap traders betting it, because remember, gold is on the inverse of relationship of the interest rates. We're not getting any cuts in January. Okay, cool. April and March, we're not getting it. That's gone up to 82. So March is out the window. All right. And now we've got April. That's gone to 68. Okay. So up until April, and tax year, we're not going to get any form of rate cuts. What's going to trigger the rate cuts? All right. Well, if unemployment rate keeps on going up, which it isn't because it came down, and we see a contraction in the manufacturing sector, which we haven't, it's going up. And of course, if Trump actually succeeds at getting rid of Powell, then he'll chuck someone in that's going to cut the rates. I think they could do a U-turn, man. I really think they could do a U-turn. You know, we're not talking about macros anymore. We're talking about Trump and his quest for becoming the orange Alexander the Great. You know, what the hell's going on, man? I just want to wake up in the morning, go to the charts and be like, where the yields at? The yields up today. Okay, let's start shorting some US stock, man. All right, they don't seem to be wanting the bonds, or they seem to be going, you know, hedging themselves, going into dollar. All right, dollar's going up. Stock market doesn't look like it's great. Yields up. Okay, I'll go short. Oh, is everybody scared? Okay, everyone's scared. I'll go long on gold. But now I've got to be like, Trump wants to invade flipping Greenland. He's got beef with the Eurozone. He's cussing at Macron about his glasses. No, no, no. And tariffs. Like, it's a fucking clown show, man. What do you think they talk about in hedge fund companies? The math is not mathing. So what do? They're like, so what's Trump up to today? I bet you that hedge fund managers sit there and they've got Trump's calendar rather than their statistical formulas. All right. And getting all their quants. They're sacking off all their quants. They're like, listen, your math is dead right now. Sorry, bro, but your math does not include orange. Give me your calculus on vitamin C, okay? And tell me how that can integrate with this type of orange that communicates and fucks the market every single day. What's wrong with this vitamin C? Are you talking about Trump? Yes, I'm talking about Trump. Anyway, we'll drink to that. Anyways, mad love and respect. I hope you enjoyed that. Please trade safely, and I'll be speaking to you tomorrow. Peace.